Hello, everyone. It is November 10, 2022, and you're watching me, Nikki Yu, also known as Business Trader, for the for the Philippine market update. Tomorrow is the global market update, but today I'll also be discussing some global news. We start off with the Philippine index as usual, so let's just go ahead through it. Let me share my screen. Okay. For those who are new here, please don't forget to like and subscribe to the Awesome10X Investing YouTube channel. Thank you for watching. And of course, follow me on Twitter at FacesTrader. Let's go in. All right, so your Philippine index, you're trading at 6,167. The market is closing at 3 p.m. runoff time. You are seeing the following movements. Let's just take a look at your index here. All right. Okay, so Converge is so I'll just go read the exact movements and the prices. Your SMPH closes 33.9, up 1.8%. Converge is up 8%, 12 pesos. BDO 132.8. You've got PLDT 1536. Wilcon very strong 31.5. Ayala Land 26.15. Emperador it's 20.1. You've got Pure Gold quite strong here at 33.25. Japan Group is 883. Asin is about 6.28. Mega World is 206. Quiet. Sun, SCC is 2975. Iwan mo lang. Thank you. RLC is 15.4. SMC 9685, JFC 233. So Globe is below 23 now. Aboitiz Power is below 33. Monde is below 12. Metrobank is below 52. Meralco below 300, 299. GT Cap below 400. It's now trading 380. Aboitiz Equity Ventures is 56.5. You've got Ayala Corp 659, ICT 176, URC 121, JGS 43.6, BPI 91.6, SM 787. To be fair, in terms of sell-offs in the Philippines, this is not yet big enough. And actually, the Philippine market has more downturns to go. Nonetheless, let's just go through some non-index movers here. Take a look at our stats here. Other than your PSEI, amongst the top traded names, DMCI is down 8%, now trading at 8.45. Semirara being traded still 29.75. A lot of coal stocks falling down. SM is down 5% here. Yeah, I prefer actually to just go through the charts. That's how I really understand things. No, so we are seeing that SM is down. But is it actually just the start of a very big downturn? And the answer is a yes. We are seeing that SM Investments continues to actually still exhibit a downtrend. And being the largest index mover in the Philippines, you can see that a drop from 800 towards 700 or even less than 700 will actually mean quite harder times for your PSEI. Your PSEI here is trading at about 6,160, and a lot of people continue to see this simply as a bear market rally, which will end up going down as we speak. And it seems like SM is your catalyst for that drop. As for Ayala Corporation, you're also seeing downtrends, breaking below 700 and is unable to actually break above 700 so far. Although there could be chances to hit 700 in the next few days, it seems as if the weaknesses of SM is gonna actually continually pour also to Ayala Corp. Take note though that BDO has been very strong recently. BDO, all the banks, we can clearly see that the banks have been reporting earnings, although we argue that that could be a peak earnings for the banks today, with net interest margin still strong, but it's likely to actually incur a lot of losses next year, not necessarily because it will lose money, but because a lot of CASA or cash and savings depositors would actually move from CASA towards higher yielding assets such as treasury bills. So you're seeing BDO currently actually at a 4 to 5 year resistance here since actually for a while now. If you take a look at the monthly, BDO has never pierced above 140 pesos, and it seems to be a strong resistance here at 140 and 130. So this is actually more of a chance to continually sell BDO. Unfortunately, you cannot actually short BDO. So it just tells you that PSEI may have room to the downside given a very little resistance, very little upside seeing at these current areas. So we haven't actually broken above 140 for almost how many years is this? Since 2017, so about 5 years. All right, so your BDO is on the downside. Let's take a look at SM Prime. Although it has been doing relative strength here at about 34, we argue that there is still a lot of leeway for downside. But yeah, so far still just really doing nothing over the last 5 years. You'll notice that from 2017 till 2022, almost negligible drops on SM Prime, but really no upside either. So still in the midst of nothingness for SM Prime. Here, Ayala Land, here, you're seeing that Ayala Land is in a downtrend, much more defined with breakdowns below 30 pesos. You're seeing Ayala Land have some selling pressure, although 26, 25 may rally towards 28. We see that just from the charts per se, that at 28, that would still not be enough. Downtrend still to go and downtrend channel. Okay, so far we are seeing some outperformance, obviously, on some power plays. Let's take a look at that. Aboitiz Power is trading at 32.33. So outperformance so far on your Aboitiz Power. You can see that all year long, it has been going from 28 to 36 and might actually be a beneficiary of your solar or renewable energy plays, as well as, of course, their existing natural hydropower plants. Now, let's take a look at your Semirara, DMCI. They're falling down south. Semirara falling down south. You do have some potential support here at 27 or 26. We will try to watch out first. It could even fall 24. So not yet in a hurry, but just watch how things play. Quite a defined support initially here at 24 as coal plants continue to be running and as renewable energy just can't easily outshine our existing coal plants. Speaking of renewable energy, although ASEN has been trying to rally, it should be noted that ASEN is still in a downtrend here with quite a lot of bear market rallies. ASEN's previous support at 6.6 was broken down, and any rally of ASEN towards 7 might actually be a resistance. So 630 could rally to 670, but still in a downtrend as we speak. With Axlag reporting some dividends, let's take a look at that. Unfortunately for Axlag, although there's some supportive action here at 164, it seems to still be in a downturn with a lot of resistance at 2 pesos, their IPO. And so far, it hasn't broken 160, but should it break 160, then you have leeway for new lows. So we don't know, but so far, Solar has tried to hold on. There has been a lot of weakness on SPNet. It can be clearly seen that it's been downtrend ever since that break of 2, 150, and so far breaking towards 1. At 1 peso, it seems to be just consolidating though. No reason to buy anyway. So just really still in a downtrend. Some convincing consumers have been strong recently. We're seeing Pure Gold breaking above 30. So far, Pure Gold is showing some resiliency, so some volume on the uptick here. We're seeing some rotation towards defensive items. Supermarkets like Pure Gold are showing that support. Now, notwithstanding that it could go below 28 as well, it could go 25 or 20. We do have an uptrend. We do have a fundamental bias that perhaps Pure Gold may actually be an outperform in a downtrending market or in a market that is flat to negative. So Pure Gold might actually just retest 35, 36 though, and then remain in a downtrend. So we are still not out of the woods here. There's still quite some selling pressure at 33 and 35, but that could be good news that it has been quite supported at 28. How about Mrs. G? Some supermarkets here. Mrs. G so far hasn't broken down this 1.23. We are seeing that it still is in the accumulating fashion. Nonetheless, we are seeing almost no volume. So no volume means that there's just no buyer, no seller in the Metro Retail Stores Gaisano. So it looks like an illiquid asset, no? So it's just illiquid. In terms of illiquid assets, we can clearly see from your most active spaces here, the ones that are not being traded is really medyo fictional. You could argue that the pricing is fictional. So that is something that you may. I'm not saying that it's fiction, but basically, when it's illiquid, it's gonna have difficulty to go anywhere. Because so far, what it looks to be is that no volume, so it's just really sleeping between 123 to 143. What about your Shell Philippines? Shell Philippines hasn't reported numbers yet, but also in the illiquid phase. So far, we are of the view that 17 pesos, 17.50 seems to be a buying area. However, there are some selling pressure as well in the short term here at 20, 21, 22. Nonetheless, looks like the illiquid, it's quite illiquid, no? So there's very, very low volume as you can see. What's been notable recently is actually quite a lot of commodities. Speaking of commodities, let's take a look at these movements. Although the volume is not yet as big, it can be clearly seen that Nicolasia over the last couple of days, prior to what's gonna happen on end of the month, which is the earnings, seems to be picking up some buyers here at 5 peso. So looks like it tried to pierce 5 peso. That was a false breakdown here at 4.75. So far, it has resistance, however, at 6 pesos for Nicolasia. But in terms of uptrend, it still is in that uptrend. So Nicolasia is still in an uptrend that might actually be a little positive for your FNI. It could also be exhibiting some uptrends here at 2 pesos. So we're seeing some buyers here as well at 2 pesos. It's still a trading range, so we've got a lot of selling pressure here at 214, not really as high as 3 or 4. Yeah, so I don't think mark is being traded. As you can see, very illiquid, so no volume, so cannot actually trade something that has no volume. Very strong movements as we saw in Wilcon Depot, now trading at 31.50. However, for these types of growth stocks, it might be in the upper trend channel already, wherein 21 buyers are probably going to sell here at 31 to 32. So might actually be a style to sell first before doing any buying moment. Lots of selling pressure still ahead. Let's take a look at your Meralco, Telephone, Globe, Manila Water. So far, we are seeing some outperformance of your dividend plays. Meralco actually managed to find support here at 263, quite a strong support over the last 5-7 years. So it could be clearly seen that 260 has been shown as support. As of 299, that's just in the median line with a lot of selling pressure, mostly at 330 above. So it seems to be acting more like a bond or a REIT for Meralco. So just like how all people who are transferring cash towards dividend assets. Okay, so we're also taking a look at PLDT here. PLDT is trading also like a bond similarly. We've got some selling pressure here at 1.7 above, but a lot of buyers also at 1.4. So it seems to be trading within a 20% range for PLDT. Same as for Globe, it's trading actually in a 20% range with about 2,000 to 2.4. So you've got a lot of buyers on Globe here at about 1.9 to 2,000, and then a lot of selling pressure here at 2.324. So we have clearly we are in a clear defined range for your telecoms and for your utilities. Take a look at your Manila Water here. Manila Water also strictly in a trading range from about below 14, some buying pressure and some selling pressure here at 18. Now, let's take a look at your I want to see the movements, property, services, mining and oil. In your mining and oil, Nicolasia and Semirara, Mark, FNI, those have the biggest free floats. The rest are very small. You can see the rest not getting any volume at all. No, pero there are some illiquid players trading PXP on account of speculation. So there are opinionated people who think that PXP might actually get some joint venture contracts, but actually that is just an opinion, not a fact. However, it looks like in the past there has been these speculators who managed to push a 1 peso PXP all the way towards 18 to 20 pesos here. So whether it can actually repeat, I don't know. Maybe it can actually stop here at 565 and then go back down to 4 or 1 peso. So we actually cannot see anything much. You can see that even the volumes are not really substantial. There are some few here, some volumes here, somewhere here, but the volume here was actually on the sell side, no? So 630 and 6 peso look to be in the selling camp rather than in the buying camp. So some selling pressure here rather than buying. Still on a downtrend, quite a strong downtrend over the last how many years? 4 years. So I'm not sure if PXP will break 4 pesos towards 1 peso. I don't know, but it looks like the downtrend is still intact for PXP. There is some speculation, but volume is quite skeptic. I do want to discuss really where the money can be made. Let's go for the title itself, which is Deleveraging Continues, FTX Files for Bankruptcy, Cracks and Breakdowns. Let me discuss how many Filipinos can make money in a market like this. Okay, and then I'll try to answer as well some questions here. Hi, ma'am. If CPI is above consensus, is it bearish? So actually, whether or not the CPI comes out 8, 9, 10%, the consensus is really bearish, although there might be some relief rallies just in case CPI comes out below 8.8. So last month, it was 8.8%, which really triggered many people to say that the Fed will have to continue raising rates, not just about 50 basis points, but 75. Now, there has been discussion that this December 14, that the market, aka the Fed, will continue to raise rates, but at a slower pace, 50 basis points. Now, I would argue that the Fed, after consecutively hiking 75 basis points, might actually try to pause towards 50 basis points if and when. So they will continue to raise rates, but it's a matter of whether should they actually raise 75 or 50. So others are saying that it would be a 50 basis points shot this December. That's consensus, December 14, and another 25 basis points around February 2023, either Feb or March 2023 meeting, which means that another 75 basis points. So all of the treasury yields overall within the world is already expecting around 5% on your Fed funds rate. Now, that said, with the Fed funds rate at 5%, we do have to argue that with several leveraged markets, you can see that my titles, Deleveraging Continues, the CPI will actually help inform that the Fed has to stay or remain at 5 for a very long time, especially not just 5, it might even spike towards 6 or 7, 6 to 7% interest rate if your inflation continues to go haywire. Now, CPI components will definitely be on food. It will definitely be on your oil and housing services. So we have to take a look. Although it seems that it will stay elevated. And even if it pauses, we are coming from a very high base. And so even an 8% rate going towards 8.4, that's just actually reported, when in fact majority of the retail would really believe that the actual CPI is probably closer to 15% rather than 8 to 9%. So with that said, I do want to share quite a lot of charts for you. Let me try to share to you a few things. So today is November 10. Wait lang, can I share? Yep. All right, so I'm gonna share this. So I do see more blood, and we're still waiting for further capitulation. If you've been listening to me for quite a while, we were saying that we don't see any capitulation just yet in the market. PSE at 6,000, 6,300 looks to still be in a selling off mode, although there will be potential rotation towards your defensives. Speaking of defensives, I forgot to say, so far the defensive market in the Philippines is your telecoms. Your banks actually rallied, which we kind of expected because the banks would still print a lot of money. However, I would argue that these banks would be reporting the best income only this quarter, and this year, perhaps next year, it will potentially be bad. Net NPL ratios might actually widen and expand over corporate debts that would have a harder time to pay their interest payments, considering that your interest is gonna spike another one. With the Fed raising rates to about 5-6%, your corporate would have to pay something in the realm of 8 to 9 to 10%. So they would have to refinance their debt at a higher rate, and so whatever income they are generating, it is highly likely that their earnings will have to be revised on the downside, and they would have to predict a forecast, not just about inflation, but the inability to continually pass on those costs towards consumers. So there is still that negative halo. I'm not sure if you call it negative halo effect, but negative headwinds. So you've got a lot of negative headwinds coming continuously, and looking towards past analogs, 1970s, even in the Philippine market during the 1997 crisis. we do have an analog that consumer staples and defense try to actually stay flat, but it does not mean that they wouldn't go down. In fact, it is highly likely that the index can still fall another 10% from here. So from 6.3, can we go 5.7 or 20% down, which could be 5,000? And we argue that the answers from the historical reason is a yes. And also, over the past couple of correlation, the Philippines is highly correlated to the USA, such that if the US markets would fall another 20% from here, another 20 to 30% downside, it is hard to fathom that the Philippines will not actually fall when the US market still has at least 20 to 30% downside to go. So, speaking from your you can actually check. I did actually tweet about the fact that Santa Claus is not coming to town. You can check actually the Nasdaq historical charts from year 2001, 1987, year 2008. The November to December habitually is a year-end rally if you don't have a recession, but we are entering recession or even a global depression, global deleveraging systems. And so, even without actually a crypto crash, we would really inevitably fall anyway. So, we do want to tell people that the best way to make money is to be mostly in the short side realm, or to have some cash parked in the dollar. Okay, so let's take a look at. Okay, so speaking of that, let me just give you still some potential downside. All right, so URC, despite the fact that it may actually be a defensive staple in a very harsh market, although I don't see URC falling tremendously down, no, it could actually fall towards 110 or 100. So these types of consumer companies could fall 10 to 20% just in line with your index. So if SM falls, AC falls, Monde falls, URC falls, you really just have to prepare for that trading range that would probably ensue in your market, in the Philippine market. So Monde Nissan is still in a new low. You have a very high multiple on Monde compared to URC, which really is the reason why it is underperforming by quite a lot. Now, it may actually not fall 75%, but let's assume that next year from about 12, we fall about 20%. So we still have to take a look somewhere in the realm of 10 and 9. And of course, we might actually want to check out on the recent numbers that Monde Nissan will share towards the market upon how the consumers continually spend towards the Lucky Me, Pancit Canton, Monde Nissan in an inflationary time. My expectation is that they would say that despite the increased costs, they're still able to generate decent sales, much similar to what happened to Coca-Cola, Pepsi sales, which really is almost in the same category. Same with the US, where snack foods, canned goods, kind of actually were able to pass on to the market, to consumers. No, so in some ways, we do think that the Century Tuna would actually be quite a resilient play, although this is going to be in a downtrend channel. So let's assume that properties will be very weak. So properties could be double beta on the downside. Beta means that if the market would fall 20%, then your properties would be double beta or 40% down. So the big beta drop in the markets that has not yet translated is actually the banks. So far, you're seeing, as you can see, BDO is trading at 130. Can 130 fall 40% from here? Can it go back towards 100 or 90? Look out below. That's all I'm going to say, because it all depends, obviously, on whether their corporations are defaulting or not. No, so it depends on that. But I would be still on the cautious side, that some of the corporations that they lent out some money might have some problems in financing those interest debts, or if they would or if they would pay those interests, then it would be in a delayed fashion. So BDO is actually in the resistance. The big risk groups would be some banks. BDO, BPI is already having a difficulty here at 100. So you're getting some difficulty so far with the big banks. Metro Bank is very cheap. However, the problem is that it could not be a stock-specific reason, but really industry-wise. So the industry might actually continually sell the banks, even if it is cheap and even if it has dividends, primarily due to a high beta risk, which can only be avoided year over year or quarter over quarter if they continually prove the naysayers wrong. So I'm more of a naysayer, shoot first, ask questions later. And I'm okay that if my perception is wrong, to actually not really have a strong bearish argument. Nonetheless, I still don't see invalidation of a thesis that properties and banks might actually be high beta shorts. Okay, let's talk about some US marketplace here. In the US, obviously, you can actually short, and that's what we've been doing, more capitulation. Let me give you ideas on what we are shorting. More blood and waiting for further capitulation. For those who have been watching the originals, yes. Who's next? Who's next? I can do this all day. Who's next? Come on, meet your maker. So around March, we were actually actively shorting. To be fair, since December 14, 2021 and November, we were already shorting somewhere here with more shorts implemented this year. Okay, so nowadays, you're seeing that your index for US, your NASDAQ is trading at 11,000, down 37% for the year for US. However, all of your tech sell-offs will not bottom out until a 50% drop. Now, it doesn't mean that it will have to fall towards 8,000 this year, but it could actually fall yet again about 20 to 30% come next year, so next 6 months. So we will see a lot of volatility here, especially on CPI, but we would argue that the best probability is to continually short. So any rallies of your NASDAQ will still be in a sell side, with still leeway to fall towards 10, 9, or 8K. This is your S&P 500 index. You can clearly see some lower highs. We have been actively shorting your March highs here about 4.5, 4.6. And then, of course, you saw that drop here towards 3.7, 3.5, rally towards 4.3. That was a 2-month rally from about June 16 towards August 16 here. We made a fast drop towards October 16. Recently, we've been rallying over the last couple of weeks on account of some earnings doing well, but we also have seen the FANGs continually break down. Just last night, Disney broke down to some 8-year lows. A lot of companies actually last night, a lot of body bags, technology firms continuously falling down, anywhere from about 70 to 80%, or 90% down, but continues to fall another 10, 20%. So we are seeing that your S&P 500 here at about 3.8 is still in a sharp downtrend towards either a break of 3.5 and towards all the way towards 3.2. So whether we fall 20% within the next 2 months or whether it happens in the next 6 months, it seems to be the path of least resistance, wherein the path of the easiest is to fall, continually fall. So S&P 500 is a short continuously. So we do have some inverse funds shorting that. Now, take note that Nike has been having problems in inventory. So it's very clear that consumers don't have money. They don't have money to spend towards sneakers, shoes. And so if you can argue that the retail sector in the Philippines, such as Robinson's Retail, SM, can actually be still in the sell side. So the problem in the Philippines is that you couldn't short those. So we're just more on the avoid in the Philippine market, considering that you really can't short the Philippine market. So what you could do though is have some US positions and actually, by the way, I think I shared it here. This is how you open you can open easily in the US. So it used to be that idle cash was 2.58. It actually started at 0.33. For those who have not yet opened their US market accounts, you can easily open with interactivebrokers.com. Interactive Brokers right now allows people with idle cash balances to earn 3.3%. And foreigners, actually like us, do have a weight bend form wherein we can actually have so we can actually earn through our dividends with a 30% tax rate. So example, if you're owning some dividend plays in the US, some dividend plays, let's say the PLDT of US, which is AT&T, that one is paying 7% yield, although 30% tax. So that would be roughly mga 5% dollar for us, no? Or you can just simply trade it. You can clearly see that sometimes we do trade the US markets, not sometimes, but we do trade it. So you can actually trade it because the markets are offering volatility, and that is really giving you quite a lot of movements here. So for instance, just recently, here about 14.15, prior to the numbers, we argued that AT&T is really giving a 7 times PE, 7% dividend yield. Of course, after rallying back to 18, 19, there could be some resistance potential here. I'm not going to short AT&T. It's kind of like really a flat type of name. You can see that all these telecoms are really mostly a flat type of zone, wherein defensive names, when they fall, obviously people would buy them. So, and that is something to consider. Okay, so how do you open an interactive broker's account? I did share here my referral IBKR links, ibkr.com/referral. You can try to find this Twitter link. Just find me on Twitter at Trader. But yeah, that is one. Another thing that you could open is also Webull. I have also a Webull account. You can open a Webull account. It is actually a Singaporean app, a mobile app. So far, they have all of these great ways to actually earn. Right now, if you open a Webull account, and you open it before December 1, just deposit a $2,000 account. It's zero commissions. That's true. So I've been using Webull as well because it's got zero commission in stocks, zero commissions in options, or 0.04 centavo. So, yes, the Filipinos can open an account. You can do dollar deposits via local bank transfers. And if you do open an account before December 1, they have a $150 cash voucher. So I do have my links here. Check my link here, a.webull.com.sg/i/awesome10x. Also, I haven't tried to borrow money with Webull, but I believe that they also offer some compelling margin rates. With interactive brokers, I believe that the margin is also cheap. I do use interactive brokers for margin. I think I pay something like 5% a year if I do have margins, although I don't use margin all the time. You can see that recently we have been shorting the market. Here, I also tweeted, you have to concentrate and focus on the most important things. Everyone can get distracted if they are too diversified. This means actually that if the market is in a free fall, it makes so much sense to actually be on the short side. And you can see all these body bags that you can make so much money from. We have actually been short a number of things, and that tells you why these accounts are going up in a month where the market is falling down. Actually, for this account, I have shorts on the semiconductors. So semiconductors, those are shorts on NVIDIA, AMDs. SQQQ, that is a basic short on Tesla, Apple, Amazon. Your FAS is a basic short on all the banks, whether it be the Goldman Sachs, the Morgan Stanley. And as you can see, these Chinese index names, Chinese names are a little bit of a distraction. So I actually closed some of these today. And I actually am just holding some inverse plays with a lot of movement to add some shorts for tonight. Speaking of shorts, so Nike is in an inventory problem. You can see that as of now, from 140, if you've got a lot of consumer discretionary lower guidance ahead, then it could continually have so much inventory that they would have to sell at a cheaper price. That means your Nike sneakers would have massive sales, massive write-downs on their inventory. And so I would argue that Nike, despite being a global leader, would have some selling pressure. So from 133, 140, we have been continually selling. Take note that that downtrend continues to remain intact. And here at about $100 or 95 for Nike, that remains a sell. We could fall all the way towards 70, which is still a 30% downside for Nike. Freer Battery is also a good selling position here. Most of the companies in the battery space still are unprofitable. Battery is really more of the lithium batteries for electric vehicles. So this is actually showing you quite a strong resistance here. Breakdown on 16, 15, 14, a lot of resistance here at 13 and 12. Would actually want to short it until it hits 10 or below. So also, if Disney can get to 8-year new lows, I do believe that Netflix is not gonna be immune, despite the fact that the recent numbers of Netflix managed to beat estimates. So Netflix business has been quite shaky. A lot of streaming giants have continually been spending a lot on programming. And although Netflix has shared that they only they were able to add some new revenue streams, they recently added the $7 plus basic ad tier program, which really is a competition towards Disney. Take note that programming costs will be expensive, and very clearly, Netflix merely filled the gap, wherein this was a gap filled here at about $300. The previous resistance and support, the previous supports at 300 and 260 are now resistances. And we can clearly see that the path to risk the path of least resistance is Netflix to the downside. Now I'm not sure if Netflix can hit 125, but at 250 to 200 to 300, one of the question marks on Netflix that I have is really on whether there will be cannibalization. Because if you have a freemium, so if you have a freemium, that means that some people may actually go from $13 plan towards $7 plan. That would mean that a potential lower revenues over time. And we aren't sure if advertising can really offset that cannibalization of your paid users. So this is similar to the Spotify, wherein you've got 400 plus million users. Half of them are paying the full price, whereas the other half are not paying anything, which is just free, just relying on advertising. I do think that relying simply on advertising is not the way to go. That's why Snapchat has been adding a lot of these subscription programs. So Netflix is actually doing the opposite, wherein they have no choice, but they have to just do the advertising, because without it, they are thinking that they would lose more and more subscribers over time. So with that said, downtrend for your Netflix. Let's go ahead also for some more ideas. If you're not aware of EVAV, it's fine. AeroVironment is actually more of a drone for military. In fact, AVAV came into the spotlight because of the Ukraine war. Although I still think that people are spending a lot on defense. In fact, a lot of spending in missiles and jet fighter pilots. The market is really pricing in a World War III. You can clearly see that on your Northrop Grumman hitting all-time highs. You've got your Lockheed Martin jet fighter pilots, the one that you saw in Top Gun Maverick. We are seeing actually that war spending continues to remain on an uptrend. AVAV has been quite a beneficiary of that. However, it could also be seen that not necessarily at these spiky valuations. So AVA, which is a drone company, so basically in military, sometimes they actually get a lot of drones to kill a lot of military camp officials or whatsoever. AVA is being used for that. So far for the year 2022, from about $60, it did rally almost 100% towards 120. But my argument here is that over the last couple of months, AVAV seems to be really in a downtrend, no, with a lot of supply factors here from 100 to 80. So I actually would watch out for AVAV, as drone companies have mostly actually down 90%. So we'll take a look. But my sentiment is that AVAV will actually be on the sell side. I also believe that a lot of your mutual funds, pension funds, a lot of your insurance firms, a lot of your institutional funds will get a lot of redemption. And so with a lot of redemption towards cash, a lot of exiting of equity funds, a lot of them will get massive sell-offs. Therefore, it is quite intuitive that Blackstone Group, which is one of the largest asset management firms in the world, is actually going to continually be on the sell-off side. Lower assets under management equals lower fees. So Blackstone 150, 140, you can clearly see that the market has been selling it off on a very clear downtrend channel. As to whether it will fall down all the way to 60 or 50, I think that it is still a path of least resistance. So Blackstone still a sell. You're seeing BlackRock also massive sell-offs here, 1,000 towards 700. But I do believe that this still has leeway to fall further. So even at 670 to 700, 750, these are great sell calls, especially if you know how to do options. So we do teach that, how to sell calls and how to buy puts. these are actually downtrends that will continually, in my view, continually be on the sell side. So BlackRock would be still a good sell off here, especially after rallying from 500 towards 700, about a 40% rally in just a span of a month. Apollo Global Asset Management rallying from near 45 to 60 plus is also a good selling arena here. So good sell here at about 60 plus. Also, I've been waiting hard to short Luckin Coffee. Luckin Coffee is a Chinese coffee company that had an accounting fraud, which actually made it fall from $1, from about $50 to $1. So far, Luckin Coffee has been rallying on account of new management and quite good sales. But I believe that sales on a consumer discretionary product like milk tea or coffee is something that is more of a fad. Sometimes you drink a lot of Serenity, sometimes you don't. So this is a discretionary good that people can actually just get rid of when the economy is in a recession. So Luckin Coffee here, about 18 to 25 are pretty much good shorts in my view. So I would be on the sell side for Luckin Coffee. Starbucks here at $92 had a good earnings. There's also the rumors of China reopening, which will benefit your Starbucks and Nike. However, I also have to agree that Starbucks and Nike will still have a harder problem with a lot of the world, not necessarily China, just China reopening. That would just be a good news to sell off to. So seeing that Starbucks is rallying towards resistance, this would be a good sell area. So at 120, you can clearly see that this was a huge supply, 1 year supply, 120 to 110. We are seeing actually a huge supply here at about $100 that will still be a good sell off for Starbucks. Now, I would also say that a lot of these Goldman Sachs or bankers have been continuously trying to pump a lot of IPOs and SPACs that are really overly valued. And I don't think that they will be able to pump more of these IPOs or issues next year or next 2 years. We have seen in NASDAQ cyclical cycles that a lot of these IPO issuance will continuously fall 90 to 99% in terms of issuances. So there will be less and less company financings to go or issuances, which means that Goldman Sachs, which is now trading near the peak of 2022, here about 360 to 380, a worthy short. JP Morgan here also trading at $130, 131, a worthy short. Short banks, insurance firms, pension funds, mutual funds, lots of toxic assets within. AIG here, 65 and 58 and 60. I do think we have a big short here, 50%, if not 75% downside for an AIG. Same for Allianz. This is a European insurance firm. You're seeing quite a huge resistance here at 220, quite a lot of resistance pressures here at 190 and 200. More redemptions for Sun Life in my view. That means lower management fees and lower earnings. That means a big short also on SLF, which is Sun Life Financial. 44 to 45 to 48 would be good arenas to short Sun Life. As you can see in the US, a lot of Americans are having a hard time in terms of retail spending. I would argue that Target is a good short here. Target Corporation would be a good short here at 153 to 167. A lot of meme SPACs, we gave a short call on them. A lot of them have already been falling 80, 90% down. In the likes of that, let me give you more ideas for shorting at current levels. At current levels, Capri Holdings, which really is one of the luxury items, will continually have a sell-off. Capri Holdings is the owner of Michael Kors, Jimmy Choo, Versace. I think that apparel, even in the luxury space and shoes, would have a hard time. And so that would be representing a good short for Capri Holdings, which is still trading at $45 here, actually still elevated compared to sales. Let's take a look further as well in other arenas to short. So yeah, this one, all the EVs are a short for us. And they've played out nicely already on the downside. A lot of these Pelotons, Beyond Meats, WeWorks, Blink, EVgo. So those have played out correctly, nicely for us. Yeah, so we do believe so since actually December, January, March, we have been short selling the market. And I did tweet about this in the past. Growth stocks have been valued based on expectations of the future. Now, if that future is bleak, growth stocks falling 80% down will reflect that weak future. It is expectations. People call it speculation, call it whatever you want, but stocks will reflect expectations, period. So there will be a lot of sell-offs. We have shorted a lot of these crypto items. We have also shorted a lot of these batteries. The only battery play that you can still short would be Freyer. Airlines and a lot of these reopening names were continuously shorts. As of now, you can, I think SeaWorld, you can still short it. Yeah, SeaWorld is 76 here. It's now trading at $53. I still would give a short here on SeaWorld. I do think that there will be less and less demand for theme parks, and there will be a nice short play here for SeaWorld Entertainment. So a lot of selling pressure to do on the reopening. Hotels would be a good short. A lot of them continually trade here with elevated response due to good numbers on their recent earnings coming from last year's reopening COVID play, but COVID reopening style. But really, so you can see 2022, Marriott was unfazed, no? It was unscathed. 2022, Marriott was 160. Right now, it's still at 150. Even with good and blockbuster profits on Airbnbs, Marriott, Hilton, we would argue that those blockbuster profits is only this year, and maybe next year is going to actually fall. So with that said, that means that their earnings or PE ratio will actually be very expensive. So therefore, look to short all of these reopening plays. The rest of the fast food sector has been continuously strong. We're still waiting for a sell-off on that area. A lot of consumer discretionary, we are short on them. And very predictable, yes, we have been playing a lot of the inverse funds, and that has been the leeway to make 80 to 90% in this type of market. I'm showing to you my eToro account. For those who want to also open eToro, you can just open eToro. I will try to send my links, referral place. But really, yeah, so shorting the index is very easy. You can just go long SQQQ, long LabD, which is shorting biotech, shorting the banks, which is I short FAS or I go long FAS, shorting Goldman Sachs, shorting semiconductors. Yeah, so I do think that there's, of course, you could short clearly some specific names, Booking, AIG, SLF. So as I was saying, I would love to short AIG. I would love to short Sun Life. So Sun Life is not here. Alliance is an insurance firm, so this would also be a good short. 189 to 200. So all of these financial services with property insurances would actually be, in my view, quite a good short. So I hope that you've learned quite some things here, and please don't forget to protect your money and understand how to short in a market where you have a lot of downside. You do make money in recessions and depressions, initially by shorting and then waiting for the dust to happen, dust to settle, which I think would happen somewhere in the realm of either first half or second half of 2023. A lot of people would peg June 2023, try to watch March and June 2023, see if the Fed will pivot or try to pause the rate hikes. There might be some bear market rallies when that happens. So there will have to be a lot of movements, no? A lot of volatility. Stay on the trading side. Investing will be very, very optimal come some time from now. So just be vigilant. We will, of course, try to scream and shout when we see some opportunities on the bear market rallies. Some generational opportunities might come here. Probably some, you never know. We could probably buy a $40 Tesla. Who knows? A $50 Tesla would be a great idea to get. A $50 Amazon. Let's see. So see you again, and hope to see you. Tomorrow will be a free Friday class. I'll be very happy to share what happened to energy plays. On dips on energy, yes, that will be a very good commodity to get. See you. Bye-bye.